The Management Reporting and Reinsurance System provides a module which will calculate the appropriate reinsurance protections for your company and manage the cash related to the outwards contracts. The protections that insurance or reinsurance companies put in place allow companies to write risks with higher limits that the company could not normally retain against their surplus. Their reinsurance program also protects them against catastrophic events. The correct reinsurance structure can allow your company to retain more premiums and smooth out the company's results year after year. In other words, give your company stability. Our software will allow you to have a combination of proportional and non-proportional contracts for different parts of your portfolio. This will allow you to utilize your surplus more efficiently. This video will show you an example of what a typical company might put in place for a given underwriting year. For this example, we say the company is writing policies with a $300,000 limit, and they have decided based on their surplus they should retain a maximum of $30,000 or 10% of any individual claim. They can arrive at this through several measures. They could put in place a 90% quota share, but this would result in passing on too much premium to the reinsurers, and placing a 90% quota share is not always easy. For our example, we are using the structure of a 20% quota share and a $250,000 excess of $50,000 working excess of loss treaty, which inures to the benefit of a quota share. In other words, a common account protection. Just to make our example more interesting, we have said the excess of loss treaty has a $50,000 deductible. In other words, the insurance company and quota share reinsurers will retain the first $50,000 of claim payments, which normally would have hit the excess of loss treaty. Just to keep the example simple, we have said we are a brand new company starting to write business for underwriting year 2008, and both treaties have a yearly account. The software can operate on a daily, weekly, monthly, quarterly, or as in this example, yearly time frame. So let's get started and demonstrate our software. When we come into your company, the first thing that we do is convert your existing incoming business into our database. Based on the information that you provide us, we should be able to isolate which transactions apply to which reinsurance plan. Yes, if you are writing several lines of business, you can have several different structures in place. So the first thing we do is set up a reinsurance plan. As you can see, I've set up a plan labeled P2008 and gave a description of 2008 underwriting year. This plan code will be written into the transactions during our conversion process. The next thing we did was enter the details of two reinsurance treaties. Let's look at the quota share first. I went directly to the second screen, which defines the rules of how the treaty should be executed during the calculations. We can see this is a 20% quota share based on a $300,000 limit, and the various codes which define how the treaty should attach, what to do with the claim expenses, and details about the accounts. We don't want this video to become too long, so we're not going to go through every variation of every code. We prefer to do that when you allow us to give you a live demonstration. Clicking the select code, this is where we assign the reinsurance plan. As you can see, we've assigned this treaty to plan code P2008. Yes, an individual treaty can apply to different structures within the same year. On this screen, this is where we set up the participation of the reinsurers. For this example, we have Guy Carpenter as the broker and Munich and Arch Re participating on the treaty. Both companies have a 50% participation and a 32.5% provisional commission rate. You'll notice the commutation code and date, In the future, the company may want to commute the treaty to any one of the reinsurers. It is here where you just code it and the calculation will be suppressed in the future. Let's take a quick look at the excess of loss treaty. We can see this is a common account protection of quota share 2008, and it's a 250 excess of 50, has a deductible of 50,000 and an aggregate amount of 1 million. You'll notice the receivable payable output code This controls how the receivable payable record will be written, either as a bulk reported or each individual transaction will be output, in this case, individual claims. Under the automatic calculations, we are saying do not calculate any premium because the treaty receives a deposit premium initially, which we will go into next. We will now enter the details of a $250,000 deposit premium and apply it to the excess of loss treaty. As you can see, our system is all point and click to pick up the various codes that are required. After entering the amount, you can see the calculations done by our reinsurance system. It took the $250,000 and split it between the two reinsurers, but also calculated the proper amount to be applied to the quota share reinsurers because of the common account protection. Now, updating this transaction, the records will be written to the database and an audit trail of the transactions will be printed. Now we are ready to execute our batch program, which will go through and read the incoming transactions and make the necessary calculations to the quota share and excess of loss treaty. I have already set up the appropriate dates, which controls this transaction selection. Our software always produces audit trails to allow the user or auditors to examine the calculations for accuracy. So let's take a quick look at the audit trail for the calculation of claims. I have selected this $134,750 claim payment. You can see the amount excess of $50,000 was given to the excess of loss treaty. 2 transactions were given to the quota share, one for the full 20% and another reducing the amount to their $20,000 retention. It has to be calculated this way because the reinsurers need to see their share of the common account protection on their accounts. The claim expenses are allocated based on the code set up in the rules records. The expenses are always calculated on an inception to date basis. In fact, the company can pay the major portion of the expenses and charge the quota share its share before the excess treaty is attached. Our software will go back and credit the quota share and reallocate the correct portion of the expenses if the claim hits the excess. As part of this batch procedure, the amounts needed for the deductible assigned to the excess of loss treaty are also calculated and an audit trail is created. I would also like to point out, as part of the procedure, the gross and ceded unearned premium reserve is also calculated, but we will look at that at another time. Let's now go see how an MRRS will let you analyze your reinsurance contract. So let's go in and look at a possible account that can be produced for the quota share treaty. You are now looking at the inception to date results for the quota share. Let's bring up a possible account. As you can see, the amounts are broken out in the appropriate categories. You can see common account amounts for both premiums and claims, and the reserves, along with the deductible amount that was calculated. We can modify the look of the account to your specifications. You will notice you can create a spreadsheet of transactions if you want to make your own exhibits. In fact, throughout the system, you have the ability to create spreadsheets which will allow you to do studies. For example, where should the attachment point be for portions of your portfolio? Let's not forget our imaging system. We will quickly go to the rules record and look at the wordings. Atypical wording. Let's look at the excess of loss treaty. You can look at an individual participant of the treaty. The buttons at the bottom will allow you to execute different functions. Clicking the Claims button will display all the individual claims which have been hit the treaty, and you can drill down to see gross to net. This is the gross description of the claim. Go to the ceded, see gross, ceded, net, and we can see the individual treaties, the gross, ceded to net. Let's now take a look at the cash management system. What you're looking at is the individual transaction that the system has created. You can see the deposit premium. As an example, I already processed a check from GenRe paying one of the claims, which was taken off this list and written to the purge file. As your purge file gets larger, you have many search criteria to analyze any contract or check. Clicking the Age button will display the transactions in a format where you can identify any transactions that are becoming a problem and start making phone calls. Of course, you can get paper reports to work on to manage your receivables and payables. We hope this video gives you a feel of what our software can do for you. Please give us a call and we can set up a more detailed demonstration using a reinsurance structure that you define.